All right, guys. Good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. Thanks for taking the time out of your day to join me this morning and every morning at 9 a.m. Eastern Standard Time here on the YouTube channel. Let's go ahead and get to it. We had the non-farm payroll report just come out about half an hour ago. All right, let's go around the horn first, and then we can go ahead and get started. Give me a second. All right, that's fine. Okay, Dow futures down about 395 points, Nasdaq down about 2% this morning off its lows. S&P 500 down about 1.45% this morning. We'll chart that here in a second. Russell 2000 down about 1.61%. Crude oil is flat, 81.28. 10-year treasuries treasury yields did spike up this morning. Post the NFP number, we'll go over that number in a second. 3.587. 105.26 for the dollar index. That bounced as well. Remember, we talked about that 200 MA on the 1 hour. It's still below that. The VIX is up today 4.6%, 2076. Gold futures down about 1% this morning with the dollar spiking. Silver down about 1% as well. Copper down about 1.3%, 376 this morning. Euro dollar, again, we talked about the euro dollar S&P 500 correlation, 104.63. 135.37 for the dollar yen. That is about 6 pips. 72 pips to the downside for pound dollar. 121.85. Bitcoin 16,775. That's down about 0.27%. And Ethereum up about 0.36% at 1270. So the NFP number not really affecting Ethereum at least. Okay, so let's go over the numbers this morning. I'll go and bring up TweetDeck here. Make life easier. Okay, first and foremost. 263,000 jobs added versus 200,000 expected. 3.7% is the unemployment rate. Average hourly earnings. Excuse me, I don't know if this is hourly. This is what the market did not like. 5.1%. The forecast was 4.6%. Average earnings month over month, it's double the forecast, 0.6% versus 0.3%. Labor participation rate for November, 62.1%, below the expectation of 62.3. So U.S. underemployment rate for November is 6.7%. The average hourly earnings for November came in $32.82 an hour, up 5.09% year over year. I believe that was higher than expected. The reason that hurts the market is because our inflation issue really isn't the supply chain anymore. It's really based on labor now. So we have too much consumption. This is what the Fed is trying to stop. It's to stop speculation and consumption. Their slow landing or soft landing. What they're trying to do is not let employment hurt to that point where it hurts the employment market while trying to fight inflation. They're trying to fight this. They're trying to level these two fields out. So obviously you get risk assets go down because the jobs number was so hot. Again, keep in mind those wages being higher. If people are working, people are going to consume. And again, we're trying, at least what the Fed is trying to do, is to reduce consumption to lower prices. If consumption is still strong, prices are going to go higher. That's just economics. That's just all it is. So again, let's go ahead and take a look at S&P 500. This is what's important. So real quick on S&P 500, you could see the trend line again. We have not got there yet on the daily. That's around 41.15. We got around 4100, I believe, yesterday, and then we fell, and then post NFP number. But again, still within that rising wedge. All we did was break above it. I put two more lines if you're into that. Again, it's still kind of within that range. Remember 3900. I thought that retest was going to happen this week. So kind of a quick story time. If you're a member of this Discord, again, very important. I would want to say this. That timing has been just so frustrating. But like I said on the newsletter, it's a trader's market. Keep in mind, I had SPY puts for the 390 puts, and then we bounced with Powell. So again, timing. Now we're not there yet. So obviously the 390s didn't work. Microsoft, again, we talked about that on YouTube. If you got into Microsoft yesterday, we got as high as 30%. I was literally about to type up to close it, and I didn't get a chance to. And then it just fell. So it did hit 30%. It even bounced throughout the day. I think it got as high as around 10%. I think we got to break even towards the tail end of this session, right around 315. I decided not to close it. I went with the fact that we would continue higher. It didn't happen. So I got to eat that one. And again, it's just timing because I had that 30%. I was looking for a quick turnaround. It bounced the way I wanted to, which was nice. And then this is what we get hit, a very binary trade. I hate myself for that one. But again, we just got to make it up. But it happens, man. The thing with trading, guys, you got to understand, especially options, right when you buy that contract, that clock is ticking. So imagine, again, kind of like video games where you need to kind of go for air when you're playing. And if not, you kind of get hurt, you lose health. It's kind of like that with, again, the anxiety builds up. And especially doing it live, I had a member talk about that. It's like it's hard to put your stuff live out there for people to see because obviously you could be wrong. And again, the idea is not being right or wrong, is getting it right or wrong. I mean, there's many times where we've done a signal and to close, and then I wouldn't close it. I'd try to hold it for a little more, and I wouldn't gain as much as the signal members would. This just happens that way. But again, this is the kind of the issue with the market. But at the end of the day, you keep pushing forward. Nothing has really broken. At the end of the day, we are below the 200 DMA on S&P 500 futures. 40-50 would probably get you above. Let's see if we stay above 4,000. If you stay above 4,000 or break below it, 3980 is pretty much your big level. That's kind of that trend line where you're going. If we go ahead and start taking a look at the macro a little bit, not just the equity side, we could see the dollar again remains down on a downward channel. It's been absolutely just obliterated in November. Got to bounce again. We're right at the 50 on the 1 hour. If we go and bring up the daily chart, we can start seeing where everything is. I think we should be testing the 200 day. So again, that kind of that fight, that 200 day of the dollar versus that 200 day for the S&P. I mean, which one is going to hit first? We broke above that on the 200 day on S&P, I believe just yesterday and 2 days ago. And then yesterday, 2 days ago as well, the dollar, or yesterday, excuse me, broke below the 200. So again, at least the structure hasn't broken, the construct in terms of that. We may just have overshot that Powell dovishness, and then we had this NFP. This is going to make that CPI number even more important because if we have strong labor market with a lowering of inflation and CPI does continue to fall as we hope, then it really starts to really kick up the soft landing approach, where a possible severe recession is not in the cards, where we would just get a bear market. That's probably the best case scenario at this point. But again, that's in 2 weeks from now, so we can't just go by that. Next week we do have PPI on Thursday. Maybe that gives us a little hint. 2 weeks from now, after that CPI number, we got the Fed, FOMC, another rate hike. 50 basis points is the expectation. 75% chance based on traders. I don't know if that has changed post NFP, but again, 75 was what we were, and then that was cut, the expectation anyway. So be 50 in 2 weeks is the expectation. Could be a 75, sure. I think that's a 25% chance that happens. But again, we'll cross that bridge when we get there. For now, it is still about the dollar right now, rejecting that 200. Let's take a look at yields together. I posted a chart regarding the head and shoulders pattern. We've talked about that here on the YouTube channel as well. We'll go and bring up the daily so we can get a clearer picture. And you could see that inverse head and shoulders, same thing we had in May, June, July. Then we had that sinking all the way to August, and then we rallied on yields. So again, kind of the same construct here. Not a textbook head and shoulders. Again, you still have a kind of a diagonal neckline, I suppose. But 3.488 sub 3.5 is what the expectation is. Again, based on the chart, again, you can see that we're starting to bounce a little bit. We do have a slight gap to fill on the daily as well. So again, that is absolutely possible. If we start sinking a little bit on equities, you better believe that we'll probably get those yields go a little higher, maybe to 368 and test. But again, I'm still waiting for that 100-day for that to break for TNX. That'll support the this channel to be holding and to get us where we want to go. And again, it's really just above that trend line by Christmas. That's what we're looking for. 41.35. The bull case still for me is 43.09. That would be the S&P 500 highs of August. QQQ, I also am long as well, but again, I have time on that, so I'm not really too worried since we're holding some MAs here. But one little piece here I want to show you guys, and it's a good one here. I know uber bull that I am, but again, I want to show you this because it was a really, really good chart. Let's see it. Here it is. Ryan Dietrich. Okay, Ryan Dietrich. You can see a lot of talk of this rally is just like the 17% bear market rally in the summer. Remember we talked about that? The June rally and the summer rally. But SPX is above the 200-day. We did not break that on the SPX. S&P we did, ES. But again, that's rolling contract. But SPX did not break the 200-day in August with that last rally. Keep in mind. That August and September are historically two bad months, especially in midterms, while the calendar is a tailwind for now. We know that seasonality is in play. You could see right here, this is the market breadth. I believe this is the stocks that are above their major moving average. I want to say it's the 200-day moving average, but you could see the divergence coming around now. We're starting to push higher. Obviously, short term now, 40.17. It doesn't sound great, but in the larger scope, while you're looking at it, again, we're just looking to get to 4,300 bull case by the end of the year. We need pretty much perfection for that to happen. I would say just to break above that trend line again, if you get around 4,100 or 4,120, I would constitute that as a win for the end of the year. I would consider maybe that a Santa rally. I mean, everyone's different. Everyone has a different definition of it, and I completely understand. So, as of right now, has any of this changed my approach? Not really. I think this is a technical move. I think that with that NFP shocking jobs number being stronger than expected, we had maybe many people, me included, be bullish. People are probably closing out their positions. But again, we'll see if we hold above 4,000 and move from there. But that Microsoft one is going to be really pissing me off for a little bit. So I hope to see if we bounce in the morning. Let's see if we can get a continuance. I've seen reversals before. It's been a reversal market, and we'll see where we go from there. Alex, I know you don't trade Path, but I bought a few shares at $11.06 on Wednesday, and is now 13.9 after good earnings. Okay, let's take a look at that Path. We'll bring that up. Unipath. Okay, so it is back down. You bought 11.6. Is now 31.9. So you're nice pre-market. Let's go and take a look at the daily and see if there's anything that we can see here that you could trade. Ooh, well, I think you got a good setup here. If you broke above 14, there's no really gaps to fill, really much to do. So not a lot of edge. But again, you can see that double wick here, Alex, right around 14.10. That's pretty much the level you're looking to break, and then you could target 15. That's pretty much where I would go TP it, is at 15, if you can get there. But right around 14.10, 14, that'll be the breakout of this kind of double top, and then I would target that 100. You could take your profits, leave your original investment, take out your original investment, leave your profits. You have so many options, especially with winning trades or winning stocks, that it kind of gives you that choice of what you want to do moving forward. And it really depends on what you're trying to go for. If you're just trying to trade it, yeah, just take your money and be happy. Learned that lesson from Microsoft, literally typing 30% gain from yesterday's trade. Let's take a look at that. I mean, it's just so killer. Microsoft, geez, again above the 100-day, pretty set up. And again, you have that gap to fill 265. And again, we had that continuance in the morning. I had it at 30, and then it sank. So again, let's take a look here at the 1-hour chart. I really want to go over it because it's important to learn from my mistakes. So let's go to, let's break it down to the 15-minute chart. Okay. So again, we opened in the morning. We got that push. We're above the 100. I went ahead and said, let's go ahead and get in. Of course, we're right here at the top. We dropped that right down, and then we were right here, I believe, 254 or so. Sorry. We got to the peak right at 30%, and then we sank. I held, and we got to break even, but I held it for NFP, and here we are. So the bad news is that it's dated for expiry. If this was just for next week, man, I'd feel so much better for it. But again, it was just for tomorrow. I should have got it for next week. That's the deal, guys. It was a binary event, and I just got hit. When you have a short date expiry, the lesson is take it and be happy. Forget the number of 40. Sometimes just don't let good be the enemy of great. But either way, we'll leave it there. Just killer. I'm going to remember that. I'm going to write that down on my board and just remember that. I'm going to replay that in my mind for a little bit. Have a great rest of your morning. We will catch you guys on Monday for the morning notes. And have a great weekend. We will see you on Monday. I just said that. Go the United States soccer playing against the Netherlands. Go USA. Let's see if we can get it done. Have a good one, guys. Cheers.